Did you know that the United States has a second central bank? Not just the Federal Reserve, but a second one? And I know what you're thinking. Oh, no, 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 no. There's no second Federal Reserve. Well, actually, there kind of sort of is. See, the Fed has been working really hard on reducing our inflation. So they've been increasing interest rates and they've been working on quantitative tightening or letting the debts that they purchased, which infuse money into our system, reduce or decline. That's the M2 supply. As you can see in the M2 supply, money's gone down by nearly $1 trillion in the M2. So that pulls money out of the system, which reduces inflation because money's harder to get. People tend to want to hold on to cash. And we're seeing problems in the banks. We're seeing Silicon Valley Bank and other banks have collapsed, but we haven't heard anything for a little while now. But there's a proof and a sign that banks are having trouble when we look at the quote unquote second Federal Reserve or Central Bank of America. The reason we know that there's banking issues is because when we look at the FHLB, which came out of the Federal Home Loan Bank Act of 1932, we see that they are putting money into circulation much like they did in 2008. See, the Federal Home Loan Bank Act enabled essentially liquidity for companies or banks specifically who need liquidity for mortgages. So if they're selling a lot of mortgages, they can go to the FHLB, get their money, and ride out the liquidity crunch that they're going through because they're doing great business, right? Well, in 2008, we saw that happen, and then we saw a collapse. And of course, there was a big collapse in the housing sector because there were bad home loans. Well, in 2023, it's very, very different. And if you could see during the peak of the housing market where houses were going like crazy, their balances were actually quite low, but now they've surged almost like a wall. In 2023, we've already exceeded levels of 2008, and there aren't a lot of houses in inventory at the moment, which tells you the volume of loans is low because nobody's refinancing their loan right now, that's for sure. So these banks are borrowing from the FHLB in order to stay afloat because they have a lot of debt that currently is not profitable to sell. And they have a huge liquidity crunch, which is putting them in a bad situation. You notice that the FHLB has put in nearly $500 billion in the last year, which pretty much counters everything that the Fed has done in terms of what they've taken out. Now, unlike the Fed, FHLB claims to be backed by bonds or debt that is purchased from the private markets. So if these banks cannot repay FHLB, it should collapse and need some sort of bailout, either from the Fed or somewhere else, if they don't fix the financial situation. So we're kind of in a pickle here. We can't increase our rates too much or we have problems with paying more of this debt and put banks in the crunch. And if we decrease it, then it's going to cause inflation. But if we don't do it, there is going to be a debt bubble that pops here, and there's going to be a big issue in the banking crisis. This isn't like the debt crisis and mortgages we saw in 2008, but there is a big banking crisis brewing. If you're still missing context, there's 3 videos I've done that are related to this. One was 5 reasons the economy is not doing too great. Number 2 is Silicon Valley Bank explained to a 10-year-old. And then 3 was my latest video I made on the Fed's secret lever. Overall, the economy is on some shaky ground. Keep your eyes open. Like, follow, and share for more.